if they actually put it on a proper gold exchange standard, in other words, you could exchange your rubles for gold at any one moment, then those interest rates would fall, and they would eventually fall to somewhere around about 3, maybe even less percent. And on that basis, I mean, the economy would then benefit hugely.
Yeah.
Because just think, if you can expand bank credit to finance production, not finance consumption, finance production, then you have got an industrial revolution. And this is actually, I think, the ambition for China and Russia, for the whole of Asia, and also the expanding BRICS membership.
In today's news recap, silver looks ready to rip. Last Friday, United States Federal Reserve Chair Jerome Powell said the time has come to begin lowering interest rates, a process that will likely begin at the Fed's September 17 to 18 meeting. Markets are widely anticipating a 25 basis points cut, or even 50 points if the economy looks weak and needs a stronger monetary boost. More reductions could follow before year's end. If the Fed follows through, it will cause bond yields to weaken further, the dollar to weaken more, and commodity prices to strengthen. When positive real interest rates, which favor bond investors, turn negative, it will especially affect gold and silver prices to the upside. Spot gold set a record last week on Powell's dovish comments. Gold's rally, which started in mid-February, is underpinned mostly by increased geopolitical risks, central bank buying, and slowing ETF sales. Silver has gained mostly due to buying in India, China, and so-called paper silver. Investors in July showed a renewed interest in silver ETFs, which had $300 million in inflows following 2 months of outflows totaling $1 billion, according to BlackRock's latest global ETP flows report via ETF.com. Now we'll show you the best clips of the latest interview, but first, subscribe and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Yeah, until Bretton Woods, basically currencies, international currencies were backed by gold to a greater or lesser degree. So really, this is, with the Americans' dollar, this is the first time you've had a currency lasting for decades without any anchor in terms of value on an international basis. Okay, so this is very, very different. I think that from China's point of view, it makes no sense at all to take on that mantle. In other words, the next fiat currency, if you like, which the world uses. I mean, I don't know what their thinking is, but I would, if I was asked by the Chinese what my view is, I would say, put it on a proper gold standard. Then it really doesn't matter, because the future of your currency in terms of how it's used and all the rest of it will come and go with your influence around the world, not with the management of your currency, which is really where America has gone horribly wrong. And this is why I think China has accumulated a lot more gold in secret than publicly declared as reserves on the People's Bank's balance sheet. They've been doing this since 1983, when legislation was put in place for the People's Bank of China to operate in markets, acquiring gold and silver on behalf of the nation, the state, the Communist Party, whatever. And ever since then, they stepped up their mining output and rapidly became the world's number one gold miner by output. Stepped up the refining, which they kept very much under state control, and banned effectively any exports of gold. So it's all been accumulating. I mean, I say it's sort of China's Hotel California for gold. You go in, but you can't get out. Yeah. And that's basically what happens. It's the only sort of small window in there is Hong Kong, and that is, it allows visitors from the mainland to go into Hong Kong, buy gold, jewelry, small ingots, whatever, and carry them over the border, and they're just allowed to do that. and it allows them to evade any sales tax on gold jewelry. So that's about the only loophole in it. But again, you see, it's all about getting the gold into China. They've even advertised for their citizens, go and buy gold, it's good for you, or whatever the byline is. So they do understand that gold is money and the rest is credit. The Russians understand this as well. And I think the only reason that they haven't started putting their currencies onto gold standards is they don't want to be blamed for bringing down the rest of the world, which is essentially what would happen if they did that. I mean, just imagine what would happen to the faith and credit in the US dollar, in the euro. And all. I mean, the euro could put itself on a gold standard because some of the major countries actually do have substantial reserves.
In today's news recap, can Fed rate cut expectations sustain silver's uptrend? Silver prices rose, buoyed by growing expectations that the Federal Reserve may initiate interest rate cuts as early as next month. This optimism, coupled with ongoing geopolitical tensions in the Middle East, helped lift silver despite a stronger U.S. dollar. Investors also remained focused on a slew of U.S. economic data set for release this week. Silver's upward movement on Thursday was primarily driven by weaker U.S. Treasury yields and increasing speculation that the Federal Reserve will cut interest rates soon. In addition to Fed rate cut speculation, traders are closely watching several key U.S. economic data releases, initial jobless claims, and second quarter gross domestic product figures, followed by pending home sales data later in the day. These indicators will be scrutinized for further clues on the state of the U.S. economy and the likelihood of the Fed easing monetary policy. However, concerns over weak Chinese demand for silver continue to linger in the background. China is a significant consumer of silver, particularly in industrial applications. Sluggish demand from China could potentially weigh on silver prices in the long term, even as investors focus on U.S. economic data and Fed policy. The recent softness in Chinese economic data has raised concerns about the sustainability of silver's current price levels. The release of the PCE price index on Friday is particularly critical, although analysts doubt it will significantly alter market expectations for the Fed's policy direction unless it deviates substantially from forecasts. It remains a crucial data point for traders. Looking ahead, silver appears resilient, especially in a low interest rate environment where it becomes more attractive as a non-yielding asset. However, the metal could face short-term pressure if upcoming economic data dampens expectations for a rate cut. Additionally, persistent concerns over weak demand from China may cap gains in the longer term, especially if the Chinese economy continues to struggle. Despite the dollar's recent gains, which typically weigh on silver, the prospect of lower U.S. interest rates has kept investor sentiment positive. Now we'll show you the best clips of the latest interview, but first, subscribe, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
But they wouldn't be able to do the other thing, and that is contain the spending, because you can't go on a gold standard without containing government spending. I mean, where the Americans went wrong, if you like, leading up to the collapse of the Bretton Woods system, was, that gold sort of meant that prices did not rise that much in the post-war years. But the expense of that in terms of growth of GDP, because the growth in GDP, it multiplied something like 6 times over that period. The growth in GDP basically meant that the other side of the price stability was the gold reserves were running out. You can't inflate your credit without an effect on prices. Now, if the prices are anchored to gold, then what happens is the gold disappears. It's actually as simple as that. And that's basically what America did. So you must contain spending. And the other thing you must do is to encourage saving, which means changing your tax policy for savers. And you must also discourage borrowing for consumption. Now, the banks would do that in a sound money environment because, at the moment they know that, you can sort of lend money to someone to buy a house, whatever. You know that prices are rising and they're going to continue to rise. You may not quite understand why, but you feel secure in terms of your collateral. Now, when that security suddenly starts going in a sound money environment, then bankers will become a lot more cautious about lending money to people to effectively spend beyond their means.
Yes.
I mean, it's back to the Macauberism, isn't it? Income 20 shillings, expenditure 19 and 6, happiness. Income 19 and 6, expenditure 20 shillings, misery. I mean, that was written by Dickens. I think it was something like the 1840s, by which time there'd been about 20 odd years or 25 years of post-Napoleonic gold standard. Gold standard in England came in about, I think it was 1822 or something like that, but sovereigns were already in circulation. So, we have to change our behavior for this.
Yeah.
And the Chinese do have this problem, but they are in a position to deal with it. And I think also the Russians in particular, I mean, they would benefit hugely from going on to a gold standard because think what happens to the interest rates. At the moment, the Bank of Russia's deposit rate is something like 18%. So, that would climb down under a sound money regime. The reason it's up there actually is really quite simple, and that is nobody wants to hold rubles. I mean, they are the enemy. They've been sanctioned and all the rest of it, and if you buy rubles, you'll be thrown in jail and have the keys thrown away. There is no trust in the ruble. But this is a wartime thing. But if they actually put it on a proper gold exchange standard, in other words, you could exchange your rubles for gold at any one moment, then those interest rates would fall, and they would eventually fall to somewhere around about 3, maybe even less percent. And on that basis, I mean, the economy would then benefit hugely.
Yeah.
Because just think, if you can expand bank credit to finance production, not finance consumption, finance production, then you have got an industrial revolution. And this is actually, I think, the ambition for China and Russia, for the whole of Asia, and also the expanding BRICS membership.
What do you think of Macleod's take? Is he correct, or is he just rambling about nothing but thin air? Post in the comments section your honest opinion and share with us your current strategy. Are you buying more gold and silver at these prices, or are you just holding strong? We really want to know. Now, subscribe if you have not yet done so, and check this video right here because you'll love it. I'll see you on the other side.